Hello everyone, welcome to Dmvii Live for September 30th, 2017. The highlight for this video is available in the Dmvii Live Highlights playlist. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform due diligence prior to investing in any company. And here are the symbols covered this week. Feel free to pause the video and look up the symbols to learn more about the underlying businesses.
Michael was talking about, and this is an ultra short of the S&P 500. So the S&P 500, if it goes up, this will go down twice as much. But if the SPY goes down, this will go up twice as much. There's some built-in maintenance charge on this.
Right.
The advice is not to hold it for more than a few days. It's speculative thing.
I see.
Because it eats itself up, and
Okay, well, I guess we got started, got twisted to begin with on this, so we haven't really had our first kickoff. Now, as Wei, you're sort of in the hot seat now. Do you want to say anything, or you want to pass?
I'll pass for now.
Okay. So the gentleman right to your left then is now in the hot seat. So do you want to say what you're thinking?
Yeah, I mean, I don't know what to tell you. I've been, I'm 100%, maybe all my 401ks and the S&P fund, I just gave up trying to time that stuff. I can't
Okay,
believe
well, that's a
still
different
going
thought.
on.
Yeah, okay.
I mean, I did, let's see, this month I haven't really been trading very much. I made about 10% in my stock fund by buying QQQ, which is a 3 times NASDAQ fund. Again, this is just luck because I've had, bad luck, good luck. I just happened to sell and I kept the gain in the QQQ, but sold the rest of it, so I got my money back. And since then, it's been kind of going
flat,
back and forth.
hasn't
I don't know what it's been doing the last. Yeah, it's been
it's
kind of
flat. Yes, it's.
I mean, I just don't understand why it keeps on going up. Honestly,
Right, no, I
it
mean,
just doesn't make any sense.
that's
You
what
understand
you
why it
think,
keeps going?
and that's what we want to know. It's what you think.
Well, what I think is, I think you guys already talked about the average of for example, the average S&P goes up 7% a year. That's the average. Sometimes it plummets, sometimes the average over time is 7% a year. In the last few years, it's been going up 15 or 20% a year. I don't remember the exact amount, but basically it's way, way higher. I don't see is there any reason why we should have a lot more productivity than before? So eventually it's going to come back to norm, or else maybe there's just a new economy where, the Fed's going to constantly, keep the interest rates ridiculously low, which apparently is what they've been doing for the last 8 or 10 years.
Here's a comparison of QQQ in blue to SPY in red. So QQQ is doing better since January. That's the comparison.
Year to date, yeah, okay.
I need to finish this article that I started reading last night about why incomes for ordinary workers, if there's such things as ordinary workers, have been flat for a long time. And without that income going up, you will have stymied growth because the middle class goes out and spends, right? And so it's a business week, and it's a quandrum. Japan has had this problem, some growth, but it's not just the U.S. that has this problem of income stymiedness, if you will, stunted growth in income over the last 10 years.
I mean, the only thing I can think of long term, I mean, if you want to put some money in, put it in some technology stocks that haven't boomed yet. Like I was looking at Tesla. Tesla already went up. And anything that hasn't been really heavily advertised. I've been looking at a few, a few that are related to technology stocks. Like if you, let's say, anything related to artificial intelligence, not the actual AI companies, but companies that would dramatically benefit from AI. Something like that would be like, maybe companies that make the chips, companies that supply the chip or something. Nvidia. But again, everyone knows Nvidia. It's, you're just asking for trouble to get in at the high point. I get it right now.
Here's a very nice company, AMAT. Just heard their CEO talk about how AMAT makes the equipment that is used to make these chips.
Right.
And they service a lot of chip makers.
Yeah.
And it's been a very good performance.
Okay, is that it for you then?
Well, yeah, one more thing I thought I'd mention, just about real estate in the area. I know this isn't specifically related to the stocks, but I still think real estate's ridiculously overvalued in Arlington. I'm still trying to sell my condos in Ocean City. Those haven't really, they went up maybe 10% in the last 5 years. So yeah, it's, certain areas are just ridiculously inflated. But again, I just.
Here's the real estate ETF I believe.
Yeah, it's just, that's, I mean, people bought like a condo in Arlington like 10 years ago, or making out like bandits. I don't understand why it keeps on going up either.
Well, the latest real estate data or mortgage data show is a decline about like 3.1% of the overall contract or any contract that's been signed at least. So we start seeing some slowdowns. And I got some friends that's doing the wholesaling business. They noticed a huge decline in this area as well.
So the question is, are the prices declining, or are these different indicators?
They not the price. The price is definitely going up because they're blaming on the low inventory. So we don't have a lot of houses available for selling. In addition to a not as fast increase in the income versus the increase of the real estate value.
Right.
So I think like income you get like 2.something% a year, whereas real estate has gone more than 5% this year.
I mean, if interest rates go up significantly, but again, I've been saying this for 10 years. If interest rates go up significantly, it's gonna crash the market here because nothing, none of the fundamentals apply. You buy a condo for $400,000 in Arlington, you're not gonna be able to make any money on it. So who's buying these things? There's
demographic shifts. I mean, millennials don't want to live in rural areas. I mean, I just read an article about rural population decline, like significant.
Yeah.
One, because of poverty, and people are looking for opportunities. There's no like manufacturing. They say, I guess it's cliche, but everyone's moving to the city.
Yeah.
So, and
it's a
kids
trend.
these days don't want to drive. I heard like car sales are down for millennials,
Yeah.
so they want public transportation. And where do you get that in the cities?
Yeah.
So they could be the ones driving the cost.
By the
of
same
these.
token, the millennials are not purchasing the real estate as much, rather renting in the city, right?
Well, somebody's going to have to buy the house to rent.
Right, and these are investors. The other thing that's driving is this, I don't think much will come of this tax reform initiative that the Congress is trying to get. It's just amount too high. They might get a tax cut out of it. But if they are, is any success, they're talking about reducing the mortgage interest deduction amount to a point that for most of us, we're not going to get much benefit out of it. I think that they're going to raise it to what, $24,000 threshold. You have to have interest of at least $24,000. Don't quote me on this. Which some of us, we pay some interest, but not that much. And so that might have an impact on real estate price. Of course, the real estate lobby is going to fight tooth and nail to keep it the way it is.
Yeah, I've been waiting for them to do that again for another 10 or 15 years, and they never do it. They're like, oh, gee, we're going to do it, and then they cancel it, and they just get taxes elsewhere.
Wait, waiting for them to do what?
I've been waiting for them to kill or dramatically reduce the mortgage rate deduction, the mortgage interest deduction for years, and they just never do it. It's like you said, so many people are benefiting from
It's
it.
American is apple pie.
So how do you benefit from?
Well, like like you were saying, the question is, what happens when this passes? And now you're saying this 24,000 rule. What is that exactly?
So if you need to have at least $24,000 in deductions before you can start benefiting from itemizing deductions.
Yeah, which means that's going to dramatically reduce the value of the lower priced houses and increase the value of the upper priced houses because
I'm not sure about increasing them, but
it'll
lowering
benefit the
by
higher
lowering
priced
them.
houses because the lower priced houses you're not going to have any benefit. You're not going to have any interest.
You're saying that everybody in the planet gets 24 grand worth of tax free. You're deducting 24 grand.
But
Forget
the gentleman's
whether you're
question
in
about
So the
doesn't matter,
people
you get it.
above the 24, it doesn't matter, is what he's saying.
Well, no, people. Again, correct me if I'm wrong. Let's say you have a mortgage. When you start off with a mortgage, let's say it's $500,000 for a house. Certainly not in Arlington. but what are you paying per month? Maybe $3,000 a month. Of that $3,000, almost all of it initially is interest rate. Is interest payments. A very small fraction is principal that reduces your actual cost. It reduces your liability to the bank. The longer you hold it, the less the interest rate deduction goes, and the more of the principal is paid off. So of course that's exactly why these companies try to get you to refinance. As soon as you refinance, all of a sudden that resets, and of course you're paying all interest to these guys, and they're making all the money, and you're not getting much of the benefit.
So what happens is you need to have a first certain amount that you need to deduct before you become eligible to be able to take advantage of itemizing deductions, which then now you can deduct your contributions for charitable contributions and other stuff on top of that.
Yeah, but he's raising the standard deduction, I think, to something like $24,000 instead of like 12 or something like that. So by reducing certain items or eliminating certain items that you can deduct itemized deduction, but you allow a lot of people to just move on to the standard deduction, and therefore he proposed that you can file your tax in the post stamp. Just a piece of paper.
So the tax benefit of that will go to people who pay a lot more than $24,000.
But it's good because, in my opinion, it's good because it discourages people to borrow more money, right? Because the only reason why you will have that $24,000 plus in interest is because you're borrowing a lot of money. That's why you're paying that much interest. So it should discourage people to borrow. Because then you have to borrow so much, such that you're actually getting
there are different schools of thought on that.
Right?
Housing prices will correct
now.
down.
Borrowing a little, you have a big benefit of borrowing a lot more. That's kind of what I'm saying. So that would benefit theoretically the higher achievers.
And also you'll benefit in the first few years because as you pay down the principal, you will refinance it again. Right? So in the first few years you can get the deduction, and then after that it's mostly paying interest.
And of course the realtors get richer and all that stuff.
So what we learned today is white pays cash. Okay.
I prefer to pay everything cash.
So that's it for you? Next gentleman there.
Yeah, I have a couple things. So I had QQQ as well. I bought in at that at 96. I think it's been on such a tear. I mean, it's been a little flat lately, but what's cool about this one is it's so heavily weighted towards like the biggest tech companies. So like any day Amazon or Apple, even if they're only up a couple points, this thing's going to be up at least a point, which is, it's pretty cool how it operates like that. And I think since Amazon has been at $1,000, it's not there anymore, and Google got there too, and Apple's still on a tear this year. I have no reason to think that you should sell this ETF. I just think that this thing's a cash machine. There was a stock that someone mentioned last week called Ritter. It's a RTTR, and all week I was wondering if I should buy it or not, and thank God I didn't, because yesterday it got whacked. It was down 30% because they
One of those pharmaceuticals,
they did a common share issuance for like $23 million or something.
Look at that, get up there.
So it just got really diluted.
Yeah.
What happened?
How much volume? Oh wow, yeah, a lot of volume.
Look at
it's only 35 cents a share.
It was 50 all week. It didn't move all week. It was at like 50 cents, but it's been as high as like $3 this year. But they're heading into phase 3 trials for this drug, so I thought maybe it would be a decent idea. And then now I'm not going to touch it now after this. And then I guess my 2 cents on the real estate thing is I actually live in a house up the street, but our homeowners live in where do they live? They live in Utah. So like I live in someone else's house and we rent. I live with 3 guys, so there's 4 of us total. And I looked it up in the property records one time, and like we're paying them double what their mortgage is. But I'm more than happy to do it because so they're making a killing off of us. But these apartments around here, and you pretty much said it, all these apartments are trying to like cater to millennials by overcharging what rent probably should be, because they're creating these like little cities within cities where you can go out and like walk to a Whole Foods or walk to an Apple store or some other overpriced retailer, and they're doing it all over the place. Like my parents are in Philadelphia and that they're doing it there too. I just have no, like, for someone who's young and trying to like save money so that I can do stuff like this, I have no reason to pay $3,000 a month to live in an apartment that really isn't that nice.
But people are doing it.
Yeah,
still is-
people are doing it because millennials, for the most part, are out of touch with reality. But
Right.
I mean, you go because I have friends in these apartments, and the wall. I asked them how much you pay. $2,500 plus parking plus utilities. It's a ripoff, and the walls are thin. The towel racks fall off the wall. They look really nice.
Mhm.
I hate to use this analogy because I like the store, but they're very IKEA in a way. Like they look real nice, but they're just kind of cheap. And these guys like Kettler and some of the other property developers around here are just, God knows how much money they're making. But I would, if I had like $1 million just like of disposable income, the first thing I would do is buy a house in Arlington, like without hesitation. That's what I would do.
And being buying from, so nobody else wants to pay?
Because the house that I live, one more, the house that I live in up the street, it's a 70-year-old house, and it's not like, it's not what I consider nice. I grew up in a very nice house, but it's also not a dump. But you go on Zillow, and the Zillow estimate for my house. Yeah. I'll give you my address. You can look it up. It's like $900,000.
Oh, that's going to be on the wire.
But the question is, did they buy it for $900,000?
No.
They
Of course
probably
not.
bought it for $200,000 or $300,000.
They bought it for
That's why it's
$480,000.
profitable.
But one interesting thing about Arlington, if you look at the values of like tax assessment and like the Zillow values during the housing crash, they didn't even drop in Arlington in certain areas.
Right.
It's interesting.
That's for that reason. I don't want to invest in something because again, if you pay $900,000, what is your mortgage going to be? You're going to lose money every month.
Mm-hmm.
Now, yes,
If you buy now, you would
Exactly,
lose
yeah,
money
so-
unless you're doing unless you're renting out to people and still charging a decent premium to what your mortgage actually is.
Well, it sounds like you can't make. I've done the numbers. Unless you get a really underpriced house, you can't make the mortgage. And that's not even counting taxes, utilities, all that stuff. If you buy a place for like $900,000, you rent out every room, every square inch. You can't.
Right, because frankly, you have $1 million house, you're gonna have to put 20% down as an investor.
Right.
You got an $800,000 mortgage. It's gonna be $5,000 a month.
Well, no, what you do is you live in one of the units, and then you get it at 3.5%.
$5,000 a month, charging $3,000, you're losing.
Here's the interesting aspect. It's that I actually did a simulation in the software before, and if you look at this area and then you take out the rent and also the amortization of the property, and then you also take out the depreciation and all of that deductible expenses, right? You actually come out negative taxable income, and therefore you deduct it from your real job. Let's say if you have another job that makes you $100K, then you can deduct from that. So net, you actually do get money back at the end of the year, but not upfront.
Right, and you still own the house.
Yeah, eventually. But then the return on investment really isn't that great. If you just look at pure cash flow, the net that you get back at the end of the year divided by the 20% you put down as down payment, that would be your ROI. It's less than 5%. Yeah.
You can make greater, but you have to go to certain. If you go to Anacostia right now, you get 15%.
Yeah,
20%.
You get like 200K houses, and then you rent it
You
out
pay
for
$100K for a
If you don't
house,
get shot, though.
just built,
You don't live there.
and you rent it for $1,400 a month. Like you can't lose. You know what I mean? Like of course the value's not going to go up, but in terms of cash flow.
But of course the counter has it. Well, then you're a slumlord. You want to. Not everybody wants to be that.
It's a headache, yeah, it's a headache.
So, but in any case, is that it for you?
Yeah, pretty much.
Looks like there's a lot of interest in the real estate conversation. I am in the real estate business, but I have owner's perspective. But we can talk about that some other time. Everybody here had, tenant perspective, but owner perspective is slightly different. But not the conversation for now. But going back to the stocks, because I had a couple of questions, and I'm going to use my time to discuss that. In one of your recent emails, Gary, you talked about. By the way, interesting emails. I invest a lot of time in looking through portions of it and learn a lot from it.
I try and send out some nice links, but
Yeah.
it's just
Yeah.
you do.
For example, I didn't know about the CEF Connect site, and it turns out to be very, very powerful on relatively unbiased. CEF Connect, one
See,
word.
Connect. And that's the old man's investments, but yes.
Now,
Unfortunately, you qualify.
So while he's looking at it, the question that I have is no space. .com in this, because it's a site, it's not a name of a security.
Right, it's not.
Yeah, if you want to type it up, if you want to type it the address bar.
Yeah, you,
Oh, yeah, sure.
you have to go up there.
Sure.
Okay, anyways, while he's doing that, the question that I had is, you made a statement in there, now it's quite intriguing, and you said that you have to be, there are advantages to be patient when you buy closed-end funds.
Right.
And of course, advantages are probably wait until you have the distribution and the dividend. But the opposite of that you said in there, that is that you can be too patient, and then there's a cost associated with that.
It is,
What does that mean?
But the problem with the closed-end funds is that the managers on paper follow fiduciary rules, but they don't. I mean, that's like, it's on paper. And it's hard to find outfits that were really, they want to succeed, they're looking out for shareholders. It's more like it's looking out for management. And the fees on there are substantial. And it affects everything. That doesn't mean that you can't exploit. I mean, because a lot of them sell at discounts, although that's been shrinking of late here.
Right.
Everyone is so hungry for income. I mean, just so hungry. So it offers opportunity, but at the same time, you've got to be alert. And
See, the thrust of my question to you was, what is too much patience, and what's the cost of it?
well, that's if they are not looking out for the shareholders, you're losing those expenses that they're burning to run this investment strategy. And that's where if you're not focusing on them, and sometimes there'll be people say, hey, you're wasting way too much money. We're going to put, because the discount might widen so much that somebody thinks, hey, they're just taking out so much that we're going to get in there and try and burn them. And a lot of people, shareholders, they don't think about it. They're sleeping. And these investment expenses that are eating away at the portfolio can undermine the activist that's not able to generate, because they're looking out for their own self too. I mean, what can you say? I mean, they're not charity, but they're trying to get things going, and then people might say, well, tune out. I'm not saying staying so patient for them that they wind up losing out from that. Because there is a risk on there. These closed-end funds, you need to pay a little attention, because the discounts and premiums can fluctuate. The only thing I will say, there probably is the PIMCO brand probably means a little something. Unfortunately, of course,
if you look at
know
PGP,
that, and so
which
PIMCOs
is
are
PIMCO,
up
if you want to put a PGP, is PIMCO,
Yeah.
she cannot even make that blanket statement.
Right.
PGP, if you could
Yeah.
look at it, please. See, if you look at it, it pays very well, but considered by some to be one of the most horrible
10.5%.
ones.
But it's at a premium on there.
It's a premium.
Right.
So just because it's PIMCO doesn't mean it's just blanket, oh my God, it's a good one, because it's a big company. If you look at PCI, which you recommended one
Right.
time, that's also PIMCO, is doing very well.
Right, that has a discount on there. I can explain why PCI has a discount. Is that first they do borrow money? They're a hedge fund type of operation. They're out there moving. I think they're expecting rates to go up, so I think they're oriented for a little higher. If that doesn't happen, they could get hurt. But,
It's PCI versus PC.
Right. Look at the same company.
yeah, that has a small discount on it. That's the only PIMCO that has a small discount.
The one at a premium is lower than, is doing better than the one without it, even though their distribution dividend is higher. But anyways, this is not of general interest.
Right.
But I want to
people
ask you that
bore by
question.
them.
Yeah, so I wouldn't go too far with it. Last question on this is, what's your opinion of DNP? DNP is,
Is that the
can you,
same?
DNP, yes, you can type it in there. DNPN,
Oh, DNC, that's
right,
that. David Nancy Peter?
right.
Okay.
Do you know anything about it? Other
Yeah,
than what it says?
right.
See, that's at a premium, but doing very well.
That has been on a premium for years. Well, they also borrow money, and that's why they're able to pay a high yield. And
So what do
they
you use
had,
on the
they're
premium?
kind of supported by the sponsor, UBS, and so they have their reputation to defend. So I think they're gonna be holding that dividend up there for years. I am skeptical of.
Okay, you are, okay. That's what I want to know, what your opinion was, since you do this for a living.
I mean, that's sort of my specialty field, and
Right,
it's very popular because they've never cut their dividend.
Okay.
But they did, actually they had a rights offering, which was a nice sweetheart deal, because the sponsor EBS got tired of they're not getting that gravy, so they did do a rights offering to help them out.
okay.
And, if you participated, you were, again, the people were a little bit too patient. They didn't fully participate in, so there was an opportunity for profit there.
Okay, that's enough for this discussion. The gentleman here
Again,
asked a
just very
question.
boring, everybody.
Maybe you can answer that.
There is
Oh,
What
what
is
do you
co-
mean by selling a premium?
Yes, premium is, that was his question, maybe I can answer, you can answer it. What is premium versus discount? He asked the question.
The premium on closed-end funds, they have their underlying portfolio, where everybody has to value them. Most of them do it every day, a few of them do it weekly, and there's a mirror who do it quarterly. But they have an underlying portfolio that they have to value. Well, but the issue is that you, as an outside shareholder, cannot buy that portfolio. You can't do it. They value it for you, but you can't buy it. You've got to buy it from somebody else. And the issue is, most of the time they're at a discount because people are just, because the fees everybody's raking off those fees. But sometimes they're at a premium, and all the PIMCO ones are all except the PCI are at a premium. Just because they've done so well. DMP is also at a premium too, but again, it's their underlying portfolio that's valued, every quarter, at least every quarter, and many every day, and DMP is another daily one.
Wait, so you're saying
And
when is that
that's where your
premium?
premium discount comes in, from what you can buy from somebody else, an outside shareholder, because you can't buy the portfolio that they have. I mean, that's,
In real estate terms, this is assessed value versus market value.
I mean, I guess,
Market
yeah, I
value
use
is higher
that,
than the assessed
right,
value.
in the property
often.
business. too,
Sometimes
if
can
you
be
wanna
the
buy-
opposite. That's the concept.
Yeah, I mean, that's a good analogy, that the tax assessed value is a certain thing, but you can't buy it.
Or the market value.
It's, have to buy it in the open market from the seller.
Okay,
So an example between PECI and PGP, one is at a premium, one is
is there a
not.
discount?
So which one is more beneficial, right?
No, you can't see. It depends on a lot of factors.
So this one is at a premium or at a discount?
That's the only PIMCO that's at a small discount.
This is
In-
discount. So meaning you're getting a deal if you're getting a discount.
Well, let's put it this way.
Okay.
At the expense of boring everybody, PIMCO's has only one discount closed-end fund. And there are reasons for that, because it's the largest one, it's the last one they did. They did bump their fees a little bit, so because they were tired of giving away so much gravy, so they upped their fees. So there's a little higher fee stream being drained out of this one than the others. And that's why, with all these factors on there, saying, all right, and they did have a little bit different focus of what they were investing at the time. Now they've switched now and said, well, we're going to go with a normal, focus. We're going to manage PCI just about the same way we manage everything else. So they're doing their portfolio is doing just as well as pretty much everybody else. but they still have all this legacy of these huge offering, that immense size, and that's, a lot of people bought and they didn't know what they had. They were tired of it. And also closed-end funds, they have this one feature too. I call it hysteresis. Is that the premiums and discounts, whatever they are, generally continue on, just because people don't really know what to do. A lot of people follow it and say, well, we want to, if there's a deal on it, we'll want to buy it. If it's super overpriced, we want to sell it. So that hysteresis effect is in there. And so generally those premiums and discounts don't change too much. But, of course, when they do, well, then there is opportunity. But it's pretty rare. And the FIMCO one is that, there's a reason for that to have a discount. It's, it's understandable, but things have changed a little bit, so it's a little friendlier towards that than it used to be. And the market, people have not picked up on that. So, if you're going to say, but, it's not risk-free by any means. I would just say DMP buys, people think that's a little safer than it really is. And that's fine.
Yeah. Okay, so enough of the closed-end funds. In terms of trading, I have been trading FANG stocks,
Right.
except for Amazon, and I've been just sort of up and down on that. But in terms of a stock name that may be interesting, is NRZ.
Yes, I've heard that recently.
I've talked about it in the past. If you look at it long term, make it longer term, as long as you can go. This is
That's a hefty yield.
pretty good yield, and it trades a lot. And look at this thing, and depending on which window you are working with, either you have made a lot or you lost a lot. And options are good, and so I've been in up and down swings, but I have such a position, and trading cost is almost zero for me, and
That's good volume.
it's a good volume. So somebody wants to play with it, it's not going to zero, but it pays dividend and everything else, all the goodies that I look for in that kind of stock are there.
So Mike, as a real estate guy, this is new residential investment, meaning they invest on new properties on a new building?
Well,
Or is that new just?
new is just
a
the
new
word.
company? It's a new company.
Go ahead.
I think Vince covered Vince.
Yeah, about the FANG stocks. I think everybody is on the FANG stocks to the extent that it's got to the point where I think it's worth staying away from it.
Yeah.
I mean, every Tom, Dick, and Harry, and every mutual fund, and every speculator, and everybody is into the FANG stocks, and it's impossible to deal with.
Like, while I respect Vince's opinion as a sage in this group, this may be a buying opportunity on one of them, Amazon.
Well, thanks for calling me a sage, but I think it's just plain hard.
But you're a chart kind of guy. You're a chart kind of guy, right? Look at the Amazon chart. Here, it's gone down. Look at that, from over 1,000. Now it's a paltry 961.
What's the volume on the declining days?
To me, Amazon stock looks topping to me.
That's what I'm trying to see here. Like,
Huh?
Amazon's going to 2,000.
if the volume's more on the decreasing days, that's a trend, right?
Sam said it. It's marked. It is going to 2,000.
Yeah, I can't quite see the volume.
Unless you're a real Sharpie that can play the little jiggles, I say stay away from the FANG stocks.
I work with AWS day in and day out. As a company and the technology, it's there. I mean, the value is all there.
Yeah.
But it's
To that point, there was some newsy thing that cloud adoption has kind of plateaued a little bit.
Yeah.
There was some news event, which is a little bit of a myth.
And Google and Amazon, or Google and Microsoft are starting to get more competitive as cloud providers as well.
And CRM, Salesforce, and Oracle. However, Amazon has all fingers going with, they're going to take over the world, right?
So just the last comment on this FANG thing.
Yeah.
You could look at it, charts and the prices, and you can justify how many people are standing in front of the Apple Store. All these kinds of things are wonderful. I have no clue, and I have
Sorry.
no real idea where these things are going, whether they're good or bad. But watch out, European Union they could do to all of these four stocks what they did to Microsoft back when many of you were not even born at that time. And if that happens to any one of these stocks, they will not go to half. They will be hit more. So always keep that in mind. And there are many people in the European Union, many regulatory agencies that cannot stand the fact that Google and Amazon, they are getting so big. Matter of fact, somebody accused Google saying, somebody from Germany making a statement of the sort, these American companies they know so much about our population and population trends than we do, and we cannot let this go on forever. If something happens, you will see what happens in the stock.
Okay.
So that is
I got
what
another,
you're
I
saying.
got
I'm
another
done.
input. One time, I went downtown Washington to one of these companies that's got a bunch of Sharpie traders. And there was a dark room, and there's computers all over the place, and all these people, they were fantastic. They would sit at a console, okay, and here's a computer, and here's a computer, and here's a computer, another screen here. Every person had this, another screen here, another screen here, another screen here, and these were just brutal. People like us, we can't compete with people like that. If you want to trade the FANG stocks, yeah, their earnings are growing and they look great, but that doesn't mean you can make money into it if you want the kind of people like us. Okay, you're going to get killed by these sharp professional traders who are looking at every little jiggle and have screens all over the place with news streaming in from all over the world. If you want to make money in stocks, I think you cannot try to compete with people like that. You're going to get killed.
Yeah, that's why you take Sam's approach. You buy it, hold it till it's 2,000.
Okay, how many people were buying Amazon when it was 100?
I think the big fuel to these FANG stocks are the low interest rates as well. I think that's not enough.
So the big thing about FANG is the market height. Everything else is minor. If you ask me, market height is the only value that they have.
Okay,
But
so,
now I'm done. Yeah.
1 minute.
okay, the next gentleman there in the corner.
Sure. So, just a quick origin story. I've recently gotten into stocks, and I've been reading a lot of books on them. I'm looking to gain as much knowledge as I can. I've been reading books on technicals. I read Malkiel's book on indexing. All my retirement
Which is
vehicles
a
are in
class, I
indexing.
mean, I'll write that down if you want to read it.
Sure.
Random walk.
Yeah, that's a good book. The only thing I didn't like about it is, well, I liked everything until I read Charlie Munger's book on Poor Charlie's Almanac, when he tore the efficient market theory to shreds. And I like that. I love his style of investing, and I think I'm going to stick with that for.
So what's the Munger book?
Poor Charlie's Almanac. It's a big book. It's not just on investing, it's just kind of his musings on life. Great book. And he completely changed my view on how investing should be done.
I mean, Munger is one that I will give a plug to. He seems to be an inherently decent person who's had some challenges in his life. But I think he might be a billionaire in the long run.
He is, yeah.
Probably is. Yeah.
Not
Might
as much
not quite be a
as
million.
he doesn't touch Warren though, but he's like 1.7
He
billion.
is over a billion. Okay.
Yeah, I mean, he's
I wouldn't be surprised.
super rich.
Yeah.
Warren's like 80 something. Yeah.
Go ahead, there, Vincent.
I got one more thing. In this group, we talk about so many different kinds of investments, and we talk about cryptocurrencies, and we talk about bonds, and we talk about ETFs, and we talk about mutual funds, and this and that. You can't be an expert in all these areas. You got to concentrate on one area that you get really good at.
Mm-hmm.
I'll amen to that, because I only focus on closed-end funds, and the other is sort of a blur.
Yeah.
So,
Munger actually talks about that in his book too. He says, stick to what you know. Don't do anything you don't know.
Can't
He
argue
doesn't
with
understand tech stocks that much, so he doesn't even invest in tech stocks because he doesn't get what's going on. And I respect that.
But I mean, it's boring.
Yeah. So like he says, he's a long-term guy. He invests in value. So for me, like if I did this as a full-time job, I probably would be more of like a day trader or swing trader. But
Hector has some experience there.
yeah, but like I'm not. I'm more of looking for value in companies and investing for long-term. I think that's probably more of my game. So buy and hold basically. So I'm just here to learn, and the main thing I'm trying to study and understand right now is the market, the general stock market, and how things move. And I'm trying to figure out if there is a downturn coming, because I don't know.
You and everybody in this room.
Yeah, I don't know. I do work for a bank though. I work for Capital One, and a lot of people just got laid off, and there's rumors that there is trouble ahead. There's rumors.
It's inside info there.
Just rumor. But I don't know.
I
I don't know if I don't work directly with financial data, so I don't know.
The Capital One is like achieving efficiencies in their workplace.
There could be that too. So I that's what I mean. I'm thinking that since it's mostly business analysts and managers, that maybe it's automation caused the layoffs. It's very possible.
Yeah.
So like I don't know. Don't quote me on that.
No,
please.
but I mean, you only know what you're feeling, you're thinking. True or not, who knows? It's just that what you think.
Yeah, you have a few things over the horizon, like the North Korea stuff.
Yeah.
The budget unwinding from the Fed, and the interest rate hike.
Yeah.
And then potentially more packing and tariffs.
Yeah.
There's always something.
There's always something.
But lately, it seems like a lot of those has dramatic impact on the overall market. Though, if you
That's not it. You're right. That's not it. Because there is a global growth right now. There's a steady global growth in all aspects of the globe. Europe is finally getting back on track. China would be a little bit of a question mark. What's that?
Turkey's a good place.
Turkey,
Yeah,
right? The East Asia. So you have steady growth. The only concern, as I mentioned at the outset, some of you weren't here, but there's an article on Business Week this week about stagnation in wages of the middle class.
Yeah.
The last 10 years, and that's where you get consumption. People buy refrigerators when they get raises. So that would be a concern towards growth, and that might be the reason for tepid growth global, not just us,
Population growth.
have less than 2%. Europe, Japan, it's less low growth because the middle class purchasing power is up.
Actually, as a corollary to that as well, I just read that student loan delinquencies went up this quarter for the first time in 3 years. Student loan delinquencies.
student loan.
So less people are paying their student loans are going into default for the first time in a few years. So there could be just a hiccup. No one really knows. It could be that many of the good borrowers have paid off their loans already, and now we're just seeing people that were never really paying them, people messing with it. But
I think that has been in the bubble for a long time.
it has been. It's not going to pop like real estate though. It's going to be a slow bleed of people not being able to invest.
Yeah, and that's the crazy part. Like I don't ever understand how can you get into a debt and not having it being able to be defaulted in a way, right? Because that's what basically what debt is. You're getting it, you take the risk that this person might not be able to pay back the debt. But student loan, on the other hand, it's like the debt that will never be cleaned away, even if you file bankruptcy, which is like, that's like slavery in a way.
It's weird because usually when you think of loans, there's like an underlying asset, right?
Yeah.
But with student loans, the asset is the potential income, the future income, right?
Yeah.
It's not real.
Yeah.
So like, how do you even price the risk on that?
That can never default.
So you're saying you think
Financial engineering, right?
So you're saying you think the student loan default rates will increase. So the question is, how's that going to affect other things? For example, how's that going to affect millennials' ability to buy housing?
Not able to afford it. You'll
Exactly.
ruin the credit. You'll ruin the credit.
Yeah.
Yeah.
Or banks will ease up on loans and they'll let them buy them anyway, and then we'll just wait for the next real estate crash like we did.
Yes, that's
last
the
time.
question. The government always throws a wrench at everything. And,
Right.
They just, anyone who bailed out of stocks during the crash, the government just spends money like crazy. They lower interest rates and bail everyone out who had these assets.
It gets worse. Opium overdose is the leading cause of death, people under 30.
Yeah.
And the overdose rate spiked 20%. I read an article last month. And these are people who are supposed to be the middle class,
Yeah.
next generation.
So I know that a lot of older people are like iffy on the student loan stuff, but it's a very, very real thing. People are having problems paying the loans, and that's gonna. I don't know what the effects are gonna be. Honestly, I don't know.
Worried about
But
the middle
it's-
class and But now you might want to take a look at this book called The Dream Hoarders, and unfortunately, it excludes a lot of the stuff about the upper middle class is putting a floor on itself. I mean, you're all mostly on, and the people below it can't break through. And
Hector, you guys are having this simple NABI.
What?
NABI.
NABI.
Yeah, Navians. That's at least when I was paying student loan, they were
Oh,
lending money to me.
Yeah.
Yeah, if we want to buy this stock, it's probably going to go up. Just saying, because the interest. I mean, actually,
It's shorter.
if they
if you
if they
can't
default
pay
or
for
not,
it,
right? Yeah, that's true. If they default or not.
Well, year to date, they're down like almost 8.5%.
That's actually interesting.
So.
Yeah, I didn't think
Yeah.
about that.
Actually,
Watching it,
yeah,
And,
Noel,
No, I used to work
he used to
there.
work for our Navigate,
Oh,
he
yeah.
bailed out of it.
Oh, right. Right.
I think, I mean, that was maybe a little inside information, if you will, when he gets out of it. Yeah, that's a good time.
Mm-hmm.
Yeah,
Well, as long
not
as you
good,
didn't
but-
held any
Yeah.
special positions there, then.
Yeah. So my main thing is I'm just holding cash right now
Uh-huh.
because I'm just trying to learn as much as I can before I'm investing in something and lose it all. And Warren Buffett is holding all his cash, so he's like my gospel of value investing. So he's not buying anything.
Wait a minute, he's holding all his cash. Where's
He
that?
with Berkshire, he has $100 billion in cash right now.
Yeah, but what percentage of that of the portfolio? We don't say all his cash.
Well,
because
mistake.
Yes,
100 million has got to be a
Obviously
pretty
not
large
everything.
proportion of
Many.
anybody's.
It's the most that they've ever had,
Okay.
and he's kind of. They're,
Well, their market cap right now is about 452 billion, so 100
like 22%,
20 something percent. Yeah.
yeah.
That's not all that out of line.
Yeah.
So
But that's not to say that Warren is not hedging that with buying puts and all kinds
True.
of other things. So he might be hedging his existing positions.
that's true. Yeah. Yeah. So I'm just learning as much as I can, and then
Yeah.
Vince,
I
you had
think you're right in being a value guy, but you can't be like Warren Buffett. He buys whole companies.
yeah, he has a lot of leverage, right?
Yeah.
And
But I think you're right about being a value guy because you're new in the business and you don't want to be a speculator because you're going to lose your butt.
yeah, and I work hard for my money, so I don't want to lose it. So that's.
So is that it then for you?
So 2 companies that I have a simulator that I'm running just to learn things. 2 companies that have done well for me, MKS. I invested in that company about a month ago and it's up 20% for me so far.
Mary King Sally, is that what that?
MKS
Nancy
Instruments,
King.
that's it. Yeah, MKS Instruments.
And the symbol? Is
MKS. It should, that
MKSI.
might be the one right there, right? On the
MKSI?
NASDAQ.
Okay,
Oh, sorry. I messed up
It's,
again. MKSI.
is it MKS?
Yeah, MKSI. Yeah.
Oh, sorry. That's my mistake.
There we go.
Yeah,
Oh, okay.
that's it. Yeah, so I bought, when did I buy? I bought it $79, so for me it's done pretty well. And Arista Networks is another one, and that's ANET. And that's up 22% for me in 3 months, so.
Yeah, that was the offshoot of Cisco, right?
Yes. Yeah, that up gap kind of freaks me out, but
Where did you buy it?
I bought it at 155. So
Right in the middle of the gap.
yeah, because gaps are support, right? Gaps kind of.
Yeah.
At least that's what I read. So
Though some technicians will tell you that there's a gravitational pull towards filling the gap at some point.
right. I've also read that they get filled eventually, which
Face it, there's a lot of opinions out there on these things, so.
yeah. I'm just trying to learn,
Right, so-
and that's
Up or right,
see
all
what
the way there.
happens.
But the thing is, know yourself. You don't want to be switching from pillar to post because you don't know who you are. That's
So you're primarily evaluating IT infrastructure or IT networking companies?
Yeah, because that's where I have the most knowledge.
Okay.
Really, that's kind of, and I think AI is the future. And I think anything artificial intelligence related. I mean, I'm trying to get into that.
Same deal.
What's the reasoning behind gaps always have to be filled?
There's no.
I never understood that. What's the
Well,
reason
there's
behind it?
people
Emotion.
buy here
Okay,
at some point, and then there is a gap. People buy into that.
but why does the price
So-
have to
so
go
the
back
reason-
down there again?
The
Why does it have to
reason, the
Magic.
up gap. No, the reason for up gap is that let's say I have a good news. I say next year I'm gonna make additional 1 billion, right? You
Mhm.
divide that by the total amount of shares I currently have, and that will be how much I'm adding on top of my each year. So the gap happens because of
Right.
the revaluation.
I know
of the
why it
asset.
happens, but why does it have to
But
be
people,
But it doesn't have
people
to.
start
Only-
taking.
So why does
Usually.
Arista Networks have to go back down to a 140?
As
It
prices
doesn't
go
have
down,
to. It
people
doesn't
get
have to.
scared.
Okay, so-
Right, it's
all
emotion. It's an
speculation.
emotion-based thing. They
It
get
doesn't have
excited,
to.
everyone buys in,
Right,
and then
right. But
when they're wrong, they're like, "Oh shit!" and
I know
they
why
fall.
there's a gap. I'm just wondering why there's like
But I think-
a number that it has to be filled
Because
eventually.
No, it
people
doesn't have
sell to fill the gap. Why? Because
Why would they sell
there
to
are
fill a gap?
I'm explaining.
Okay.
I think what,
People buy here on a speculation.
Okay.
Many people do, and when they see the price starting to go down, oh, I made a mistake. They start selling, feeds on itself, keep selling. And those people that have made a little profit here, I'm going to keep whatever profit by selling right now. That selling feeds on itself and accelerates,
Mm.
and then gets more people kind of concerned, and they keep on selling. Generally speaking, that would when the caps fills. I think that's the process that's happening. Not always,
I'll
but
say in the
you're right.
environment, if you have a good company and it's constantly making more money every single
Yeah.
quarter, the gap will never be
Right,
filled.
right.
Mhm.
Okay.
So I'll just say
Right.
it's
So-
just case by case scenario.
Yeah,
case by case, that's perfect.
Yeah.
yeah.
All right, so that's it. Is that it for you?
That's it for me. Yeah.
The next gentleman there.
Yeah, I agree with you. I'm also value equal, and I'm trying to learn as much as possible. And I think value investing is the best way to go. Also.
Yeah.
So I've said this a couple times. I'm kind of interested in investing in Africa. So I had some free time last week, and I put together like a little document on telecom in Africa just to kind of clear my thoughts out. I just wanted to share with you guys.
That's a good idea.
Read a couple white papers and did some research. Josh Hume actually inspired me to do this.
Okay.
I wish he'd say anything.
Give him a plug. I mean, he's got joshhume.com. Anybody miss that?
Okay, so according to investingafrica.net, 3% of Africa's rural communities are connected to a fixed telephone
What was
network.
that? Africa.
Investingafrica.net,
Investing up.
No.
and relatively few urban residents can afford the cost of a DSL or broadband cable network in their home. Thus, for the vast majority of Africans, the easiest, most efficient way to use the internet is through their mobile devices. So, Cisco has a white paper called Global Mobile Data Traffic Forecast Update 2016 to 2021. And according to them, the Middle East and Africa will have the strongest mobile data traffic growth of any region with a 65% CAGR, followed by the Pacific with 49%. And so the mobile traffic growth in 2016 in Africa was 96%. So two companies with the biggest market share in telecom in Africa are Vodacom and MTN, both based in South Africa.
Okay, so is the symbol on there or something? Are they listed?
VOD is Vodacom.
VOD, okay.
Yeah.
VOD.
VOD. And but the one that I'm most interested in is MTNOY. Which I did.
T-N-O-Y?
Yes.
That's their symbol?
Yeah.
Okay.
Oh, M.
Oh man, look at that chart. Yeah. Can you zoom out a little bit there?
Oh wow.
Very low volume.
Yeah, it's 24,000
Seems like it's way
shares
too low.
average. You expand that. It's a base right there.
Pretty quiet.
So what happened? The share tanked in 2016. The Nigerian government gave them a $1.7 billion fine, and most of their users are in Nigeria. Actually, 58% of their subscribers.
So we leave at 2050, right? Like here, July of 2015. Or so.
Yeah.
And it's based and kind of creeping up.
Yeah, so I mean, I think
You like that chart, Vince?
this is kind of discounted the stock.
Vince
I mean-
likes that chart. Bye.
Okay. And they've made a profit. This is the only time in their history that they haven't made a profit when the Nigerian government fined them.
What was that giant 2 days of volume right there, down there? See that?
All right.
Oh, I believe fines for Iran were lifted. Okay. So their next biggest market share is Iran, where they have 47 million subscribers, and they couldn't repatriate their money in dividends because they own a majority share of in Iran cell.
Okay.
So when the global community lifted the sanctions, they were able to
Full cash out.
remove $1 billion in dividends, approximately. So
Is your interest to invest in these companies or?
yeah, to invest in both of them actually, but I like this one better because I mean the few times I've been to Africa, I've seen this company everywhere.
So what do you think of the catalyst, the thing that's going to make it regain its
Growth.
mojo?
I mean, if you look at the
So what time period, what horizon we're looking at?
5 years, like minimum, I would think,
And
something to buy.
Things can change a lot, 5 years, wow.
Because Africa has the biggest population of people under 30 on Earth.
Right.
All of them are going to want smartphones. They have the lowest smartphone population, I think,
Okay.
in South
Penetration.
Africa.
And Facebook, I know, is trying to get out there and give internet to more users
Yeah.
because that's the only
And
way. they
they'd
can make
love to
money.
have
Yeah,
some
and they can't build
service.
cable, so it's going to have to be the 4G and 5G.
See, matter of fact, the comment I was gonna make is that you gave a lot of percentages earlier, and I'm interested in that, the technology part of it. It's easy when you have 1% and you go to 2%, that's 100% growth. So it's a lot of percentage growth is being pumped up, and many people fall into that. However, the issue is that a lot of, Vodafone is a European company, so they're everywhere, so it's a very strong company.
Yeah, this is Vodacom, but they are.
Yeah, but the other one
Yeah.
is, so they are not just depending on one region.
Yeah.
Technology, companies like Facebook that you mentioned, they have building infrastructure in Africa is next to impossible. Even though Chinese are going to places where they're doing a lot of things. So companies like Facebook and Google, their interest is to get users. So what they're doing is they're thinking about balloon-like routers that they will,
That's right.
on one side, communicate with the satellite, and the other side will just have a swath. So instead of building a local infrastructure, which many of these companies are, their interest is not to build anything, just make internet
You should
access
just get more
available.
companies like this.
So building infrastructure, for example, in this country, we have one of the best telephone infrastructure in the world is not in the United States. Well, because US had telephone infrastructure from the 40s. We have not done anything to improve it. And there's no reason to improve it. But countries that have nothing at all, and they're installing new lines wherever possible, have the best infrastructure. But yet, if you look at the reality of it, that's really no improvement, because now the company like Facebook, particularly Facebook, is interested in actually throwing satellite-based balloons for the swath
That's right.
in
So
several
like you're
areas
saying,
in
like
China.
Facebook might put a lot of money into this shop, to make sure
So
that they
little
can.
guys have no chance.
Oh, but I mean,
Well,
if
this is not a
they
little
wanna put money
company,
in
no,
it.
by the way. I mean,
Yeah.
they're one of the biggest cell phone.
Yeah, it's an
Service provider in the
ADR,
world.
it's an
17 billion
ADR.
market cap,
But is Facebook trying to be a cell phone provider or just be an internet provider?
Yeah, that's my,
Yeah.
yeah.
I think, like, what if this company latches onto Facebook for their,
Service,
Facebook
right.
is the infrastructure and then they are just using Facebook? Is that, I'm not, I don't know. That would be.
Yeah, I mean, are they going to provide Wi-Fi over like 100% coverage over
Right.
Africa? You still need a
You
cellular.
still
Yeah,
need
so
the.
my point was just be careful about some of these small companies, because they can very easily be overtaken by big boys. And there's a lot of work being done at UN, since you're reading white papers. ITU is actually funding the infrastructure, not the on-ground infrastructure, but wireless infrastructure in that region. And there's so much money coming into it, it's all gonna go to the big boys. It's just that kind of thing. Okay, good.
I see your point. That's true, because I was kind of thinking about this because I'm like, my family's Jamaican, and I saw what happened when a cell phone carrier cheap came into Jamaica, changed everything. Like places that didn't even have electricity.
We'll have
People
cell
have
phones.
Facebook on their
Right.
phone, like iPhone. Yeah, it was nuts.
Whoa.
Yeah, so like you'd have to go to somewhere
Priorities.
like your
So don't
library
look at those
charges.
regions as you do here,
Yeah.
because here infrastructure means something different than infrastructure over there means. These are two different packages.
So it seems that this company, what it's doing is actually business solutions related to
mobile
cloud
is-
and financial transactions and entertainment, shopping, and mobile platforms. So they aren't really in the infrastructure line of business. So they will have to.
Well, they are, but
But
also
the
another-
new, the 21st century infrastructure, not the old.
Not the old infrastructure, what we call infrastructure here.
Right. We're 20th, they're 21st. Yeah.
I mean, for example, they're the largest distributor of digital music in Africa. Also, they have a competitor to Uber in South Africa called Snap. So yeah, the company's
So it's
invested.
like
a
the
lot.
Amazon over there now.
Yeah, exactly. Yeah, they got big because they were one of the countries after apartheid where they had to like shift some of the ownership into like black ownership.
Yeah.
Ownership. Yeah, so, and they're one of the ones who did very well. But they're expanding all over Africa. They have like 50% market share in Syria, so that's another possibility for growth in the poor areas. Rebuild everything. And there's a couple cons with Iran if sanctions go back up again or something happens.
Yeah.
The South African rand is kind of unstable. Like it's been dropping a lot, and also the Nigerian naira is unstable. And what's weird is that they have trouble getting fuel in Nigeria for their Nigerian operation. It's kind of ironic, actually. And instability in Nigeria affects their business a lot.
So there's a lot of risk.
Yeah.
Perfect.
Exactly. And the ethnic tension between Nigerians and South Africans, because I don't know if you guys remember the xenophobic violence in South Africa earlier this year, where they're attacking Nigerian businessmen and foreigners, yeah.
Yeah.
Because they're saying they're taking jobs. It's kind of like here, it seems.
Right,
Yeah.
same thing.
Yeah.
Same, I
I'm
mean, as
expecting
weird
the
as
last
it
researchers to
is.
get killed pretty soon.
Yeah, so if Nigeria, which has the majority of their subscribers, decide to like boycott them, Nigerians say, I'm not using them anymore. And then the company's done, I think.
Damn.
So, yeah, there's a lot of risk with that thing.
A lot of wild cards in there, but
Yeah.
hey.
Risk.
So is that it then for you?
Yeah. Oh, no, actually, I have one more thing. I bought Facebook a while back, but two things have been concerning me lately about it. One is it seems like they lied about how much, people their ads target.
Not lied, but didn't tell the truth.
Oh,
Well, that's a lie.
Oh, Michael, are you
Like-
running for office?
Fake news.
Like their ad
Yeah,
coverage,
okay.
they said they can target like 40 million people under 30, but the census shows there's only like 30 million people in the country of that age. So maybe it's illegal immigrants or something they're also targeting.
Yeah.
I don't know.
Well, what counts as an ad targeting someone? Like,
Yeah.
You know, yeah. I don't know.
And
There's
then-
underlying regulatory risk
Yeah.
for all these, for big three players at least, including Facebook. That one you were talking about, particular one. Google has other issues, and Amazon
Yep.
is on the wrong side of many people, including Trump.
Mhm.
So that risk is regulatory risk, regardless of dollars and cents and wonderful company and a big company. Regardless of all that stuff, regulatory risk, both in the US in one way and Europe is another way, is there. That has to be kept in mind. So shares the Facebook that you have, you sort of need to, be on top of it, what to do with it.
Yeah, and also the next problem, this whole like Russian ad thing.
I was just gonna say that.
But
yeah.
the problem,
Yep.
like I think about it kind of differently because I was listening to this guy, Mark Zuckerberg, and he said something like
Who's he?
the ads weren't effective in targeting like anti-Hillary people, and I was like, wait a second, are you saying the ads don't work? I don't know, that just kind of concerned me.
It's very difficult.
I would keep a close eye on all that Russian stuff
Yeah.
because if it comes out that they got into Facebook, I don't know. I don't know what's gonna happen.
Let me ask you this, what concerns you more, the risks with Facebook or the risks with MTN?
Facebook.
In
Because
some
I
ways,
actually
they
have
have
money
more
on
to
Facebook
lose.
right now, like this.
They have more to lose.
Yeah.
Yeah.
Because you have more of a stake in Facebook.
Yeah.
Facebook is
Facebook's
huge,
expensive,
and
though.
this other outfit is, peanut.
Smaller, yeah.
But his particular stake in Facebook is higher.
If these guys are thrown in the mud, no matter what they say, even they're saying the right thing, you put a wrong thing on. Look, Gary Cohen the other day, all the things they said were right, but once you're in the mud, all the words that you use, they can be distorted. Facebook is being put in this situation where they even do the right things, they nice things, kind things, they look bad from a different perspective. So this is the fear that I also have, that these companies are being slowly pushed into it. Like a German guy that statement that I made earlier, he said, "You know more about our people than we do." My God, just think about it. If somebody were to take an action on that this American company here making money, and they know more about our people than we do, that we cannot tolerate it. Something like this, if it explodes, if it picks up some steam, that will be explosive. Anyways, okay.
Right, is that it for you then?
Yes.
Well, lady, and we're always glad to have ladies here.
Marie. Anyway,
Marie.
I wanted to know how to get on your email list, Gary, because I know you know a lot, and I'd like to get your emails. How do I do that?
Oh, well, you can just xxthcent at gmail.com. 20th Century Man at gmail.com. I'm lost in the 21st century.
What is it again? That was fast.
Yeah.
It's $5 a month charge.
Subscription.
No, it's just,
It's XXTHE.
TC.
The 20th. Oh, century. Okay.
It's
Century.
XXTH.
CENTMAN at gmail.com.
CENTMAN at gmail.com.
It used to be triple X, and now it's double X.
But it's okay, you know, you can leave X as the variable, so it can be 20, 21st, 22nd.
I'm afraid I'm from the 20th century. I'm really a lost ball in the high beats.
Well, you know, I was hearing all these things about reading all these articles, and just, it's always been an interesting thing to me. You know, on this week you hear this statistic, and then it's really interesting. It'll just be, it's kind of like, you know, it was about 5 years ago, it was don't eat fat, then it was eat fat. Now sugar's been demonized, and you just, these things kind of, wow, it's amazing how they can change. So I always say the Mark Twain line, there are lies, damn lies, and statistics. But an economist said to me yesterday, he had the line that he liked much better: never trust a statistic that you haven't manipulated yourself. So,
All right.
one thing I'd like to say about the house buying, when the market dropped here back in 2009 and stuff with houses, Arlington, and I live in Alexandria, parts of Alexandria and DC, were the three areas that really did hold the prices pretty well, even with the drop. Now, about 5 years ago, I read a book Zillow had put out. You know, Zillow has all the real estate. You can search for real estate on Zillow. So they get a whole lot of information and data, big data. They put a book out about 5 years ago, and I can't remember exactly what the name of it was. It was something about the Zillow housing book or something, and I read it. I can't remember the exact name, but it was a really interesting book. And what they said is, if you're buying a house and you want it to appreciate in value, I do remember this. They said if you buy a house close to the city, those houses have already appreciated a lot. So you can't expect them to go up that much more. If you buy a house that's more than 20 miles out, it's too far.
Yeah.
The commute is too far, and they're not going to go up that much more. But I think they targeted houses that were like 18 to 20 miles out of like the center of DC or the center of some city. About 18 to 20 miles out. People are still willing to drive that distance, I guess, to get to work, and they figured that those houses would go up the most. Also, another thing I remember from the book, and like I said, I read this about 5 years ago, they had in there what they called the Starbucks effect. They said if you buy a house within, I don't know, maybe it was like 2 or 3 miles from Starbucks, or a mile or two from Starbucks, those houses went up more.
Because they did the research to pick the location. So you leverage off their research.
Yeah.
Yeah.
They said this. I read something about Trader Joe's that also
Oh,
works for
really?
Trader
Yeah.
Joe's. I don't know. I feel like Trader Joe's writes these things themselves.
I mean, that's actually a good point, because you think of Starbucks, I mean, they're really in the real estate business
Yes.
as much as the coffee business.
Yeah.
So,
And they want to pick a prime location, right?
yeah.
And I'm waiting for Zillow to write another book like this so I can kind of, go up to date. But
Do you have the name of that book? Or-
if you go onto Amazon, I'm sure, and say Zillow book or something,
Zillow book.
yeah, it'll probably come up. Like I said, I just can't remember the exact name. And it's in the real estate section of like Barnes and Noble.
Zillow Talk. Yeah.
Zillow Talk. Okay.
Cool.
Thanks.
You're marketers.
But they apparently get this, they have the data from their real estate, the big data. They can see certain trends,
Yeah, a lot of
sort of.
machine learning and big data.
And the other thing I wanted to ask about these closed-end funds, with closed-end funds then, because, like you said, there's an NAV, the net asset value, and then you either buy at a premium or a discount. If you go to sell a closed-end fund, is it harder to sell then because you have to have somebody who wants to buy it because there's just a limited number of stocks?
You always have somebody who has to buy it, right?
Somebody who wants to buy it if you want to sell it.
Right.
It's not that hard to sell one then.
No, I mean, these things go in and out of popularity. So, I mean, they're in certain fields, so foreign stocks are hot, that everybody wants.
And the things like PCI, it was interesting what you said. They're depending on the interest rates to go up.
I think they're kind of positioning themselves for that to go up now. That may not be right.
I mean, Trump seems to say he's going to keep those interest rates as low as he can because that's what's making this market fly. When I was a kid, I remember a little saying, when interest is low, stocks will grow. When interest is high, stocks will die. And so as this interest, but they're moving those rates at glacial rates, the Fed, it's glacial, a quarter.
And I think they're buying the Fed story that their rates are going to be going up. And I think they're positioned for that.
They're going up so slow, it's the only. But I don't think Trump's going to make them go up faster because if he makes them go faster, this market, like the fundamentals are really questionable on this market. What's keeping it up so high?
Right, I agree with that.
So if Trump is like, keep those interest rates as low as possible. And, we were talking about how much the Fed, if he does choose a new chairman, it's supposed to be completely independent, but, I kind of wonder if all that's with a wink and a nod some of the time if you chose the person who's in there. So I don't expect interest rates, during my lifetime to even be 2.5%, 3% at the most. I think they've lowered it from 3%. The Fed was going to do 3%. They've lowered it down to 2.75 now, even at its top. Right. So and then who knows? They'll probably do. And I've always heard that they wanted to. Janet Yellen wanted to raise it up a little bit in order to lower it when the crap hits the fan again. So.
No, Vince, you want to say something?
Okay, the market started going up on election day.
Right. Oh yeah.
Up because they figured this new president is going to be friendly to the business world.
Right.
Those little details that you're talking about don't mean a thing to the stock market. It's keep going up. It's gonna. I'm convinced it's going to be a real bad pullback.
But the thing is, if the way they're keeping everything going up in the business world is keeping those interest rates as low as possible, because that makes business.
Now the stock market believes that the rise in interest rates is going to be meager, little by little.
Glacial,
glacial. That's a good way of saying it.
Priced in already, too, I think.
There probably are.
The stock market is looking at the big picture. But I personally believe that it's gone up so far, so fast. In my whole life, I've been in this for a long, long time. In my whole life, I've never seen a stock market go up this far, this fast. So it's got to have a pullback.
I'm waiting for it, Vince.
It's long waiting, yeah. I mean, the thing that scares me is if they find something on Trump with this Russian thing that is enough to incriminate him.
I just think this Russian thing's going to be a nothing burger in the end. I don't know. I mean, no one knows.
It's a bet, right?
They'd have found it by now.
Mm-hmm.
If there's something incriminating, they'd have found it by now.
So,
But think of this about that. What the market likes is you don't have a person in the administration who's going to continue the regulations. If Trump goes, you got Pence. He's not going to put regulations for business, like Vince says.
I think the bottom line will just be use this time as you're learning, find the companies that has very good fundamentals. So when there is a correction, you buy them.
Yeah.
So this is actually the perfect time to learn.
Yeah, it is.
Yeah.
It is. That's why I'm learning as much as I can, reading everything, coming to this.
Definitely.
Which means that you shouldn't be looking at companies that are way overvalued.
Right. Yeah, you want to see something interesting? Look up Netflix and look up their PE ratio right now. It's like absurd.
Disney may buy
I
this.
can't believe people are investing in it. It's like, how? Like, where is, like, I feel like it's all just castle
Well, you
in the sky.
mentioned
Like, look at
AI.
the PE ratio.
You mentioned, I'm sorry, what's your name?
Lawrence.
Lawrence, you mentioned artificial intelligence. They're the main users of artificial intelligence. They know what you want before you know it.
Yeah.
And they know how to stream it. Now, Netflix may be bought by Disney. Who knows?
And here's the thing, though: it's artificial intelligence is going to be commodity in the future. That's it. So
So Don, you're next.
Nothing.
Getting down to one, okay. And Kate, you're next?
My big move this week was I got in on the Roku IPO.
Roku.
Yes, that was the one.
Is that the symbol for it?
ROKU.
Roku is.
The TV thing.
Yeah, they do the set-top box for TV.
Okay,
So.
KU.
How long are you gonna stay in it?
That's not the symbol.
Roger Oscar King Alpha.
Yeah, it's right there. ROKU NASDAQ.
So I bought on Thursday and I sold on Friday.
Oh, you did? Okay, that was my point. Yeah, don't sit on it.
No.
One day of data.
Wow.
Ooh.
So
Yeah.
Ooh, the doji.
wow. So that's
One
like
day
60
magic.
something percent.
Yeah, I got it at 18.16. I sold it 28.80.
Nice.
All right, great.
For you.
Now, so is that it then for you, Keith?
Complete. Yeah.
Excellent. Wow.
Vince, we'll go back to you. We're getting down to our times.
I'm kind of looking at, I've done in my whole life, I've done best with the things you don't like. In other words, open-end mutual funds. I've done well with them. And I have not done anywhere near as well with individual stocks or ETFs. So I'm looking at buying Fidelity Contra Fund. I'm just looking. I haven't done it yet. That's all I got to say.
I guess you can probably pull that up, Hector. Fidelity Contra.
What is the symbol of that?
I mean, can you type in just the noun? I think you can just, can you put in
That's
search?
FCNTX.
Right there.
Yeah, CNTX, yeah, you can pull that up. Okay. That's something for people to look into.
That has always, for 30 years, been just an incredible. I mean, we're talking 40 years ago, actually.
Wow.
40 years ago.
Just the name
I
tells you
remember
that.
it.
So you want to say something, the gentleman there?
Yeah, I wanted to learn about the options, with how they might put call and stuff like that. You think y'all are going to get into that?
Option?
I have some videos on YouTube that you can watch.
Yeah, he can do it.
So
How to buy,
how?
put calls, options,
Yeah.
those-
You
those
treat them just like stocks, right? Like you look at the ask price and the bid price and the strike, which is the price that you're willing to get assignment at, and then you buy it at the mid market.
Yeah,
So-
That's
I was hoping
very simple.
sometime we get in a class, how we can do that, so.
Did you want to use options as a hedge or just buy them outright?
Right, that's the one, I watch the CNBC, they talk about that.
Yes, options action and all that.
Right.
There's a lot of information on the two. Now, Way also with a tutorial. You need to look at the
The
tutorial
ways,
to get the fundamental. There's a lot of intricacies about it. We don't have enough time to get into
I
them
mean,
right now.
Hector has had some experience, and he was talking about earlier about how.
You do have to remember that 75% or so of options expire worthless, so you want to sell them
Right.
rather than buy them.
That's the giant difference between stocks and options. They expire.
But that's just a
Time
general
on
rule.
it.
Right, but you don't pay as much as you do for the stocks, though.
Right.
With
Yeah,
but
the
it comes
initial
with risk
investment
because you pay for a
A lot
premium.
more risk.
You
Right,
pay for a
right.
premium. If I want to buy Apple stock, it's 150. If I want to buy the option, it'll represent like 155. So I have to go to 155 before I break even.
But when you buy that option, you pay, I don't know how much you pay, but you pay fraction of the,
Yeah, but the stock has to go up by that much of a premium that you pay for that option.
but,
Because
so if you lose, you don't lose that much, though, right?
yeah, you lose whatever you spend for that option.
Right, those kind of things I would.
Simple,
I
quick
have
example.
learned.
Have you ever traded stocks?
Yeah, I have,
Because if you're now going into options for the first time, get ready to lose money.
Yeah, you gotta understand stocks first.
no, I haven't done
There's
very
no two
well.
ways about it.
I've
For a
lost
couple of
money on
years-
the
For a
stock.
couple of years, you're gonna lose money.
Yeah.
Right, but that's
As
still.
long as you understand that, fine.
No, I mean, I'm not gonna throw money like back to back, but I just wanna learn how you buy option. And if you lose a little bit. I don't think
Take a look at Wade's tutorial and it'll be
No, but you're gonna lose consistently.
Yeah, you're gonna lose a lot more.
At a time.
You're gonna lose more than.
There's no such thing.
Well, it's not,
I tried.
free money. There's no free money.
It's hard.
So,
Right,
I don't know what I
so
tried.
it's a tool that you can use. It to amplify your return, also amplify your loss. But then it's good to learn that too, to have it under your belt. So when you need it, you have it.
Right.
I heard about it.
Because I went and see they talking about it all, and they were talking about
It's a hard game.
that you can do both ways, calls or puts or something on both sides of it.
Yeah.
If it goes either way, you make money.
You can do
or
the same
lose.
thing in stocks as well. The effect is the same thing. Because the only difference that you pay, let's say if I want to buy 100 shares of this Fidelity fund, that will be like, $12,000.
Right.
Whereas if they have, I don't think they have options, but if they have options, you can buy one contract, which is equivalent to 100 shares, for at the same strike, 120-ish, you're probably going to pay like, maybe $200 versus $12,000.
Right.
But then the risk there is that the stock has to move above this current strike, which is 120 plus the money you pay before you even start making money.
So if it moves that target price, then
You make
money.
nothing. No, you move that target, you make nothing. You broke even. It has to move above and beyond what you pay plus the strike that you chose.
What's your name, sir? What's your name, sir?
Joshua.
Joshua, take that website. See that up there? It says tastytrade.com.
Tasty trade.
Right there. www.tastytrade.com. Look at that. Option strategies. All you ever want to eat. Now,
There's a group waiting to get in
No,
here.
I think
Okay, so we gotta
Put
put
the
it
volume on the left part down.
now they will.
Other people outside?
They will tell you.
F-U-X.
Josh,
F-U-X-X.
Josh,
S-E-X.
Josh.
Take a look at it.
Is
Ask you another one.
That you were on YouTube if they cleared the participation dropped you.
Sounds, I don't know, but F-U-X.
I tried to
S-E-X.
upload stuff.
F-U-X.
Stimulating.
Yeah, that's why a lot of people. That's why I have a lot of.
I'm wondering for many that
I'm glad I helped somebody.
That's my problem right there.
And this concludes this week's live stream. Thank you for listening.